Well, we've got US inflation at 2-year lows, and we've got the US dollar being taken to the woodshed. We've got good buyers emerging once again in US treasuries, as we see bullish breakouts coming through in the NASDAQ, the US 500, and also the Russell ahead of earnings. We're seeing Bitcoin ominously poised to have a breakout. We're seeing vols lower, but this is a market high on opportunity. This is the trade-off. Well, hi there, I'm Chris Weston from Pepperstone, and I'm going to be joined in 2 seconds from Blake Morrow from Forex Analytics. And it's a big day today. We've just seen US inflation coming down to a 2-year low. As I said in the synopsis, we are seeing dollar sellers emerge left, right and centre. It is getting absolutely pulverised at the moment. And the question, of course, is whether this continues, whether that CPI print was a game changer. So I'm going to bring Mr. Morrow into the programme. Blake, we have an absolute ton to talk about, and we'll cover off a lot of those factors, but I'm seeing big moves. I know I said that volatility, you look at the VIX at 14%, FX vols are still very shot through the floor, but there's some big moves taking place, and there's some interesting setups playing through, which we're going to discuss. So opportunity seems to be sort of just dotted around everywhere I'm seeing at the moment.
There are, and I always have to remember that you're fresh into a brand new day. For me, I feel like I've ran a marathon today. As far as the markets, it's been very active. The dollar just got slapped really hard, broke or testing some pretty key levels of support, as you're going to talk about, as we're going to talk about, and I guess that's the big question is will it continue? And I know where I've got my chips placed right now.
Hey, well, so. I tell you, might have done a long day, but you're looking fresh as a daisy, sir. Nice bit of makeup then, I'm sure helping out an ailing, frail body. Anyway, let's go into topical the fun. Let's see what some of these chips are looking like for Mr. Blake Morrow. I'll go straight into inflation. How can you miss it? Headline inflation 3%. We've got core coming down. Core services ex shelter printing 9 basis points or so. I mean, if we can look at that on a 3-month annualized basis of 1.4%, it is coming down. But those core numbers, 20 basis points, we've got to look at a month-on-month clip rather than a year-on-year, I think is clearly the play at the moment because of the base effects we've been seeing. But, we are talking, lower numbers than the market was looking for. Now, we do obviously have PPI inflation in the session ahead, and that will give us a pretty clear understanding of the core deflator, the PCE deflator, which comes out on the 28th of July, which, of course, the Fed look at somewhat more closely there. But in terms of this CPI number, the market has reacted. We've seen big moves in both the Treasury market, go out to Fed funds or USR swaps, and you can see sort of big move there, repricing in sort of March. We've got about 13 basis points of hikes being priced out there. Treasuries have been bid across the curve, certainly in 5s. And the dollar's just been taken to the woodshed. So the question is this inflation number a game changer for you? Or, is this something that potentially base effects will start picking up and we're going to see it become a bit harder there? So how are you seeing this inflation number?
I'm going to mention his name just because I happened to have a conversation with him yesterday. I talked with your colleague or our colleague, Mr. Michael Brown, and I was talking to him yesterday, and we were having this discussion about inflation. And he put it eloquently, and I'm going to put it maybe not so eloquently. I think the toughest job for the Fed is going to be in the months ahead to get inflation where we're at right now down to its target. It's kind of like, I've never run a marathon, but when I was in the military and I was in the Marine Corps, we ran like 20-mile, couple 20-mile runs. And I know that the first half of that run, it's easy. First 3 quarters of it, no problem. The last quarter, it's tough. It's really tough. And like I said, I'm no marathon runner, but that's the way it feels to me. And I think that's what the job that the Fed has, ahead of it. Is it a game changer? No, but I think it did put the markets in a place where everybody was positioned for potentially a firmer number. Definitely, all numbers across the board came in weaker than expected. The dollar was already heading lower days ahead of this. It's like, even the stronger data hasn't had a positive effect on the dollar. And so the dollar just came under pressure, and that just propelled the markets. It's kind of like the domino effect. And I think that that it isn't a game changer, but it's what the market's going to be trading on probably for the next, well, at least the next 24 hours, so we get PPI, right, Chris?
I think you're right, but I think you make a great analogy there in terms of coming into that last furlong, that last furlong, and it being a hard one. This is the Fed need to get right, and this is a really positive number. The Fed will be looking at and saying, there's so much that's looking good about this number. Shelter's going in the right direction now, and they'll be following the Case-Shiller price index with about an 18-month lag there. Core services, ex-Shelter is looking good. Used cars obviously going in the right direction. This was obviously a big reflection of what's happening in airfares. But it's going in the right direction. All the metrics they want to look at. The question is can we back this up with further moves? So they'll look, this is great. They're still going to hike rates in July, in my opinion. One summer doesn't make a swallow, or is it the other way around? I think the next CPI number, as long as it's cores below 20 basis points and month for month, then that's probably there's a good chance that's them done. So I think this is a really, really positive number for the Fed. But like you really eloquently pointed out, with I've got my army boots and my gun, and I'm sort of doing that 20-mile run. This is the area that the Fed can't slip up on. This is the hard bit. They need to keep pushing it, in my opinion.
Yeah, they do. Well, let's talk about the dollar and the dollar's reaction. And we're going to turn the subject here. Just because the dollar just got smoked across the board. I mean, the dollar yen has already been under pressure. I think a lot of people are starting to anticipate that the BOJ may tweak their yield curve control at the end of the month this month. So the dollar yen is already under pressure. Fortunately, I closed out all of my yen positioning over the course of the last 24 hours or so. But you've seen the euro dollar pop above 112. The sterling's perched right up at 130. And the question is, and this is kind of the conversation we were having before we started filming, is can this move continue? And I'm trying to think of what the catalysts are that are going to propel the dollar lower. I know, and hopefully you all do too. There are some weekly, especially with the euro dollar, right around the one. It's about a 112.90 or so, 112.80. There's a big weekly or monthly 618 retracement, some big fib levels, some big resistance just ahead. And even though I'm positioned short dollars at the moment, can this trade continue? And I want to ask you, Chris, what are your thoughts on the dollar on this big breakdown? Because it's hard. I mean, you got the Swissy. That thing is just absolutely dying.
Bang, 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 bang through the floor.
Cable won't stop. I mean, everybody's bearish to sterling. And what if we start tripping stops above 130? Next thing we're trading 132.
You say they're bearish to sterling, but have you seen positioning in cable in sterling? I mean, it's about as rich as you're going to see. Whether you're looking at the CFTC report, investment bank flow desks that are talking real money. We're talking exporters. Everyone, I think every man, woman and dog has got a long position in the pound at the moment. And it is saturated, but it keeps going high. Now, the problem with the dollar, if I look at the dollar smile theory, there's no real reason for the dollar to be getting smacked. The US is still probably one of the better places to be. It's one of the best houses on the neighborhood. Global growth is slowing down. The European data, Chinese data is hardly inspiring. So the dollar smile theory doesn't suggest that we should be seeing a bear trend coming through in the US dollar. But I think that the market is looking at this terminal pricing now in Fed funds or swaps and saying 5.4%. We have got so much conviction it's not going any higher that yields are going to be capped, and they're selling dollars. So there are some smart people saying that this CPI number and what we're seeing here emerging is a game changer for the US dollar. Maybe not for rate settings, but for the US dollar it is, and for carry as well, and continue to push into that carry trade, especially with volatility lower. So, I want to buy the dollar, but I can't. It's too hard. We're at key levels, as you point out, and it doesn't necessarily suggest that we should be doing what we're doing. But you've got to keep an open mind when things are sort of. There feels like this kind of change that's going on in the FX market. People have been selling dollars for a few days now, and I'm trying to put a real reason as to why we've seen such ferocity in the selling. And you just got to go with it. When it's doing this, it's catching a knife in the moment. So we've got key technical levels there. So I want to buy dollars, but I'm not going to until this just washes out a little bit and we get some stability. At the moment, I'd probably be, if I'm holding a short dollar position, I'd stay with it because there's a lot of things that are going through that we need clarity on it. Is that fair?
Yeah, no, I think that is fair. And it's hard for me to be, and I just to clarify, I happen to be short some dollars right now, and I'm not comfortable with it. B, I don't plan on sticking around too long. This is one of those, kind of Momo trades that one of the trades that you're famously known for is, hey, we got a breakdown. I'm going to go with it at least for now, but I don't want to be chasing too much lower, if you know what I mean.
Yeah, good man. All right, cool. I want to switch gears a little bit because something that's coming up very much in our focus. And, I talk about these breakouts that we're seeing in equity markets. And I think a lot of that is down to the weaker US dollar. And certainly if you go into some of the Asian equity markets, if we continue to see this weak dollar play out, we are going to see big outperformance from the Hang Seng and some of these markets as well. So do keep an eye on that. But in the US, bullish breakouts in the NASDAQ, the S&P 500, and also the Russell, which is made a higher high and looks really strong as well.
Yeah, go ahead.
Go, mate, you're bursting the seams. Hit me.
No, that was my play of the day last week, and I thought I was a hero because, literally the next day, the Russell 2000 was down 2.5%, and then it has turned and just ripped and broken out to the upside.
So you covered?
Bonkers.
You covered?
Well, I never got short. I was playing it more as risk, but still, I was watching it. Obviously, I want to pay very close attention to it, but did a U-turn really fast, 2 days after the show. But anyway,
okay,
go
cool.
ahead.
Well, I just want interesting because we got JP Morgan, Wells, and Citi kicking us off on Friday. And we watch, obviously, JP Morgan's your premium bank, isn't it? Well run, great balance sheets, good liquidity, all those factors there as well. So we're watching those ones very closely and hear what the great man says about the outlook and all the factors that are taking place. And then on the 17th, this is one for your Russell trade. On the 17th, we start getting some of these small regional banks reporting as well. And we're going to be watching those very closely indeed. One suspects that the banks have been a little bit de-risked, given sort of the bigger banks, given we've just recently had the stress test and we saw the SLOOS report recently suggesting that there hasn't been a massive downtrade in credit recently. But that said, we are watching it very closely. And then I think in that last week of July, we're going to get the sexy mega cap AI sort of thematic names playing through 50% of the S&P market cap reporting in that last week. We've got this big factor, the weaker dollar, a bid coming through in duration. Got momentum on equities. Do earnings matter for you, Blake? Do we care, or do we just go with the macro?
I think they 100% care. They do matter. Let me just clarify that. And looking into next week, there are actually a couple bigger tech names. Does Tesla qualify as a tech name?
It's an AI, mate.
Is it?
It's AI. Every
AI,
day.
all right.
Yeah.
Everything's AI. So Netflix is probably AI. It's figured out which movies I want to watch and definitely don't want to watch.
I'm AI, mate. Anyway, what is this thing you call love?
They're next week as well. But we have Goldman Sachs next week. I think we have some of the bigger banks. But you're right. A lot of the regional banks, and I think earnings are rich. What's earnings right now for the S&P currently? 22.
Earnings. I don't know the EPS, but we're trading around 18 times on the S&P forward. The market's expecting about a 6.5% decline EPS aggregate for this earnings season, which might be one of the biggest declines we've seen in earnings for a while. That sort of earnings recession is going to be cemented here. But the revenues, market's expecting about 20 basis points of revenue declines, with the first revenue decline since 2020. But the outlook statements, the outlooks are what it's all about, isn't it? We don't care about the earnings for here and now. It's about the outlooks. It's about what happens about rates. What are they saying on consumer demand, given that the cost of capital's been going up? There's this idea about pricing a recession, which kind of come off the ball a bit now. Earnings, the recession call has been pushed into 2024. Rate cuts have been priced out. Will that be brought on? Will CEOs give us any reason to believe that credit demand is coming down, that the market has mispriced this recession risk? The outlooks from CFOs and CEOs are going to be probably what's going to drive the market there, I think, more importantly.
All right. Well, points well made. And speaking of which, since we're talking about earnings, let's shift it into the markets. And there's a Goldman piece talking about blow off tops, and I think this is a term, Chris, that is really misused in the markets. Blow off tops, V bottoms. They're not super common. I've been trading for literally a quarter century now, as silly as that is. But I've only seen major blow off tops or big, V bottom reversals that completely stop everybody out only a few times in my career. And I could think of like some of the times. One of them was the dollar Canadian when it dropped like into the 80-cent mark, and I happened to be around in the European trade. And then what I saw on all of my quotes, everything got crossed. The dollar Canadian was moving 300-400 pips, like literally in like a 10-minute snap. Then, I've seen one when crude oil, marked up those highs back pre financial crisis. That was another like just blow off top in the market. And there's very few times where I can actually define the market as a blow off top or a V bottom. And I think it's, I think what people got to realize that, when you have like a major top in the market, like let's say we're looking at the S&P and we're thinking that last year's highs were the highs, which I would argue they probably were. For near term, longer term, like over the course of the next couple of years. I think we're forging more of a high in the market in a big long-term range environment where the bottom of the range is probably going to be around 3,500, maybe 3,200 in the S&P, and the upper end of the range is going to be around 4,800, 4,900, or somewhere in that neighborhood. Those are the kind of things that I look for I don't think we have the backdrop of having like some sort of blow off top in the equity markets. But when you see it, you'll know it. And one thing I do want to point out is if you get a move that's like 5, 7%, 8% higher or lower, and then it reverses that same session, that usually is what would signal to me, price action wise, that we had a major top, major bottom. Anyway, I used up a lot of time, but I wanted to bestow some of this experience that I've had over the years with a lot of our newer traders, and I know you've got a ton of it as well. So what defines those major market blow-off tops for you?
Well, the V bottoms, what we all love. I mean, I agree that they're rare. I mean, generally, like recent history, 2020, 2018, they typically happen. Yeah, it's interesting. They happen so frequently just after options expiry. The market goes into this furious downtrend. Options dealers the street's buying puts left, right, and centre. Of course, options dealers have to cover that and hedge their gamma, and they sell the underlying, which obviously extenuates the fall. No one buys, and then of course you get to this options expiry where the dealers have got this huge inventory of short futures positions, and they don't want them. The next day they cover those shorts, and the algo sense it, and we get this rapid move up, and people buy into that. That's what causes the V bottoms a lot of the time. On the top side, though. When you get extreme sentiment, bullish sentiment, you get extreme positioning. That's always a good one. But also, I think from the option side, you get a lot of people, a lot of funds looking at these yield enhancement strategies. It's what we saw it's caused the big move down in 2020, and people are selling calls above the market. And of course, in that situation where everyone's short vol, when the market does eventually snap, you got this extreme positioning playing through. You've got extreme sentiment and this positioning from the optionality, which needs to be covered as well. And that's what causes this ferocious move down. We're not there yet, in my opinion. We may bubble along, but that's what would cause the blow off top is a function of those factors. So, you got your checklists and saying, I still think this market, I don't think this market's loved at all. I know we're going up and we're buying pullbacks in everything that moves. But I don't think anyone enjoys doing it. People are chasing it. They're chastising themselves. They go home, they buy the market and give themselves a beating for doing so. No one likes doing it, but you've got to get paid, right? And that means chasing the market. So I don't think the checklist there for a massive blow off top myself. But again, price action is what we trade. And if we see range expansion, volatility picking up, then you got to go with that. So we'll react as traders to that when we see the signs. Anyway, great for bringing it up and great for bringing some of your wisdom there. Anyway, let's go to That's a Setup. Right. We've been very dollar heavy today, Blake, and rightly so. Like you say, dollar knocky, dollar stocky yesterday getting absolutely taken down. I think dollar stocky was down 2.7%. But we've got the Dixie here, which we obviously know is a clear reflection of euros, which is nicely above 110. A bit of yen, a little bit of sterling. as you say there, the pound into 130, and the positioning is so rich. But yeah, we're right on that key support levels now, aren't we? Just into that sort of mid 100s, lowest since I think April 2022. If we break through these levels, the question is can we do it? The liquidation we've seen has been intense. It's just been just been brutal. I mean, the buyers have stepped aside. The sellers have had an easy job of moving price lower. We've seen 5-year treasuries dropping profusely. Real rates down 19 basis points overnight. That's an incredible move. And it justifies the dollar weakening here. But do we buy it off this support level? Does support mean anything in this market? Or do we just brisk through it like a knife through some old butter?
Well, Chris, you bring up a great point about rates. One of the biggest positions in the market right now, or has been in recent weeks, has been bearish bonds, right? Bond traders they're short, right? Well, that's reversing pretty aggressively. So if yields continue to drop, the dollar probably will follow suit. I was pointing out about the 618 retracement in the euro. The 618 retracement in the dollar index actually comes in at 99.20 or so. That's on a weekly basis. So that's not too far from where we're at, but that seems like a place that's a logical spot that we could go. Here we are going into Asian trade right now at the time of filming, and you're starting to see the euro perk up near its North American highs. Sterling's getting close to 130. You start triggering stops above these levels, and next thing you know, each one of those currency pairs, whether you're talking the euro, the sterling, we could trade up another 1-2 big figures. Dollar yen, another big figure to the downside, especially if we clear through like the 138 level. I mean, what is going to stop the dollar of this momentum, at least over the course of the next 24, 48 hours? I know some of us, yourself included, want to be long of dollars, but I don't know. I'm seeing some pretty big breakdowns, and I think you got to let them play out a little bit first.
I'll tell you what's going to happen here, right? So the next candle, I know people may be watching this show a day or 2 days or even longer after this happens, but then the next bar is so important, and the price action, the behavior. If we break through these levels and it holds, that would be very telling for the dollar shorts, and you'd want to stay in that position. But I wouldn't be surprised if we did see a nice move down. Obviously, stops taken out, and that's the level that potentially look to buy as it comes back in and pulls back inside the range. So the next candle is key, and how it closes. Does it close back above? Where does it close within that range? I think that's what we'll be trading.
All right, well, Chris, I'm gonna bring up the U.S. dollar Norwegian krona, and I want to knock. Uh-oh. Who's there?
Very good.
Yeah,
very good.
The krona is, and I'll tell you what, we've got a nice little head and shoulder pattern. We're breaking down. The one thing I do want to point out, over the last week, this currency pair is literally down almost 7%.
Crazy moves.
6.5%.
Crazy
moves. But that's what we also would call, if you're an Elliott wave guy, you would call that impulsive, right? So that means that there's probably some further. I always like to say, big red candles are usually followed by other red candles. Same thing with like a white candle or a green candle if you're looking at red and green. But in this case, we have some big bearish candles, and the head and shoulder pattern really takes us back down towards trend lows, which will be 968, 970. I know we're getting oversold. The RSI is reaching into oversold, but oversold can become more oversold. So what do you think about this when you're talking about the dollar, Chris? Look at and on top of it, crude oil has broken 75.
Yeah, when you talk about the RSI, what this does is it says to me, do I want to be short? Do I want to be initiating shorts at these levels, or do I want to be short at a slightly higher level? And if so, how cute can we be with a potential retracement? But selling rallies is the trade. The question, right, as always, is how much how high it can go, and that's what we've got to try and understand. And price action is what we trade in that situation. But if the market is genuinely of the belief that we've got real strong conviction about the terminal rate being around 540, and it's not going to go any higher, which obviously comes down to the inflation. One swallow doesn't make a summer. I think that you look at carry as a strategy. In Norway now, I mean, look at those inflation rates we saw this week, 7% or so. They've got an inflation problem, and they're dealing with it, and they have to raise rates more. And of course, you've got crude having a decent move. You've had, so much working for NOK. I mean, it's the high beta currency. Yeah, it's the highest beta G10 currency. So if, the euro's going up 50 basis points and you've got the Aussie going up 75 basis points, then the NOK is going up 90 basis points because it's the highest beta currency out there. So when you are seeing that dollar liquidation coming through, the NOK is going to be the one that has the biggest percentage move because it's the highest beta one. So that's why we've seen such ferocity in the selling there. But I think that RSI tells me one thing. Stay bearish right now. Yeah, maybe if you're a mean reversionist, there's plays there. But for me, the question is what levels you look to sell into that rally, is my opinion.
Right, there you go.
I want to do an education session here. So I'll get my PhD. I don't have a PhD hat. I'm going to borrow one temporarily. And kudos for anyone who does have a PhD. I'm certainly not going to even try and challenge that one. What we've got here, I think, is really interesting. Is what we call the R-star rate. This is an academic tool, and people sort of pick it subjectively. But yeah, there are ways we can look at these. The R-star is really the neutral rate. The policy rate that's set in the market, that is the right policy rate, the neutral rate, the equilibrium rate relative to expectations of full employment and growth. So it's the right rate for what people perceive to be the employment, the right employment situation there. And what we do is that you adjust that for inflation. So it's the real neutral rate effectively. And you can see that currently sitting at 0.6%. Now, what we can see as well is the Fed funds rate, and I've adjusted that for core inflation year on year. And you can see that at 0.4%. Now, the Fed look at that pretty closely. The Fed have talked about R-star and real neutral rates before. And what's interesting there is over the course of history, going back to the 80s, there has been 6 or 7 samples where we've actually seen the real Fed funds rate, and I'm using realized inflation rather than expected inflation, which is typically what we adjust these factors for. But what we're seeing there is the real Fed funds rate on a core basis is just about to pop over. We get one more rate hike, which we expect in July. That is going to be north of that. And what we can see over the course of time is very briefly, do we see a situation where once it goes above that neutral rate, it doesn't stay there for very long. And I think we're just about to get to that point. So that usually indicates that we've hit the end of the cycle. So for me, and I'm sorry to drag on, Blake, but for me, in this situation, when people are saying how much conviction you can have that we're getting to an end of the tightening cycle, this is one of the charts that I like to look at. We're getting the Fed funds rate above the core inflation rate year on year. And typically when you get that above the R-star, that is the point when we hold it for a little bit of time. It could be many months, higher for longer, but that's the end of the cycle. And I think that to me is what a lot of people are focused on from an academic perspective. I know I've taken my time there. So have you got anything on that?
No, I think this is great. I learned a lot. And I think what you're telling us is you're almost at a point where you can say with confidence that we are at the top or at the end of the rate hike cycle.
Well, we can say with confidence because like the sample, like if you're a statistician, you'd say like seven samples is still pretty random, but given the meaning of this, it probably gives you some significance. But yeah, we get to a point where they've taken the Fed funds rate above the core inflation level, and that's also above what the estimate of R-star or the real neutral rate is for the economy, and that's the point. As you can see here, typically. When we start having real conviction that the Fed are pretty much done on its tightening cycle. So, yeah, I think this is quite an interesting one.
That's a very interesting one, and thank you for the lesson, Doctor.
Yeah, take it off now. I can be a normal.
All right. Well, let's move it over. Let's go to something a little bit more dumbed down. We're going to go look at silver, and I could put hi-ho silver and just think of like old westerns. But what I want to point out is silver, and you want to talk about high beta. Silver is actually breaking out of a consolidation. It looked like it could have been a bear flag pattern, but we were actually tightening in this triangle. But we broke out today, closed above the 50 DMA, and silver is now making a move higher. Now to complete that just the minimum expectations of this triangle consolidation, we're looking at a move that would take us about 25 or so. Now, the reason why I like this chart is because, again, as a high beta play to precious metals, you look at gold. I think gold has some upside left in it. I think it has another at least another $15 to $20 to complete an inverted head and shoulder pattern. But if that is the move that you're looking to get out of gold, well, silver going from 24.10, 24.15 up to 25 and a quarter is not that much of a stretch either, even though percentage wise it would be bigger, based on silver. That's the high beta equation of it. But I do like silver to the upside. What are your thoughts on silver here?
Yeah, we talk about setups. I think this is the setup of the day for me. I mean, yeah, it's been clear consolidation. Those ranges have been coming in, as you always see in those triangles. What a triangle does, really. But then you wait for the market to show its force. And yeah, we've got that dollar weakening. We've got real rates coming off. And yeah, there's been a battle. No one's really been prepared to make an authority. And yeah, the bulls have stamped out and said, we want a piece of this right now. We are going to be the dominant force. Yeah, pullbacks are buying opportunities. And I think we go up to that target. So I love the setup. I think it's a really strong conviction one. The RSI is broken out, as you see there. That rate of change is picking up. I like it. I think this is the chart of the day for me. I think I like the upside. I'd be looking short gold, long silver as a pairs trade. I think silver's going to outperform on that high beta notion as you talk about there. So great chart. I think this is one that goes higher. I think absolutely share your thoughts, and I love this pattern. So well done, Blake. Kudos to you. Anyway, let's go into play of the day. Let's see what's going down. Play of the day, they call that play du jour in France. Let's go to long Bitcoin. Ooh, we're waiting for an SEC verdict coming through on ARK's spot ETF. I think we're probably going to get a decision in early August, by all accounts. It could come earlier. And that obviously, if they get that through, then that'll give us a pretty clear indication about whether the SEC are going to give their blessing for BlackRock's cash ETF, which I think the Bitcoinists out there would say they don't want it to happen. But I think price action will be very positive indeed. What I like about this right now, and I'm not long now, I want to wait for a breakout. And you can see there's consolidation. Obviously, no one really wants to be short in case we do get the decision, which could have big implications. And of course, we've got the weaker dollar and liquidity working quite well. But you can see those Bollinger Bands really coming in. So we are seeing lower realised volatility playing through. The tight ranges are playing through. And the longer this goes on for, the more powerful the move, up or down. And that's why I'm going to wait for price to close above the top end of that range, 31,000. We've been sort of bubbling on. The market's just building up some pressure. And we've got this fundamental catalyst. So I'm not long now, but I think given what we're seeing in terms of this coiled spring up against resistance, if we get a break above these levels, I'm long, and I think it starts trending. Of course, we don't know if it will start trending. You could get failed breakouts. We often get failed breakouts, but I think there's a lot of people willing this one on. And I think if we get that breakout on a closing basis, I think this can go higher and start bull trending, and I want to be part of that.
So, Chris, do you think it'll break out?
Ah, yes. That one from last week. I don't want to use it back to back, but when it comes to puns, I'm a happy man.
That was a good one. Hey, and jokes aside, I like the consolidation there, Chris. And I have people asking me about Bitcoin. So I think I'm going to put them right to this segment of the trade-off this week. But my trade of the day is going to be the Aussie yen. And now, so let me clarify a few things here with the Aussie yen. We have a quadruple confluence down around 93 and a quarter. So that is a 38% retracement of the lows that were set this year to the highs that were set basically this year's range. It's also, you got trendline support, you got a 50 DMA, you also have horizontal support right at that 93.20 level. Look, I think any dip down to 93.50, I want to play it to the upside back in the direction of the trend. Now, I do want to clarify that I've closed all my yen longs this week. I still am a yen bull, but that doesn't mean near term. And that means probably over the next, couple of days, maybe next week, while stocks are ripping and while the dollar is weak, I could take advantage of some yen shorts, maybe some of that carry, get this Aussie yen back up towards 95. Once we get above 95 or around 95, I'll be looking to actually go the other direction. I'll be looking to go long yen again. So I think a top is actually forming, but this quadruple confluence could offer nice levels of support, good risk reward for people that want to be on the long side. And I've got an outstanding order that's going to be outstanding until I get up tomorrow morning, see if I get filled. So there we go.
One of the issues there, of course, with Aussie yen, an interesting one for people out there, and leave a comment, let me know what you're thinking out there. But yeah, we're waiting for an imminent decision on the new RBA governor. Philip Lowe's tenure steps down mid-September, and we're probably going to get the treasurer, Jim Chalmers, talking about a new RBA governor at some stage, whether it's going to be Michelle Bullock or one of the other candidates that have been focused on. Whether we get, I think policy continuation will probably be the strong one there, but something that is a small risk for Aussie longs, I guess, in that situation
and that's something that I wasn't thinking of. And
I don't think it's going to be a massive risk. I mean, we'll have to see. There are some people who are being considered who don't have massive experience in monetary policy settings. So that could be a bit of a shock. So we'll see. Anyway, I think the other thing which we need to focus on, we haven't really focused on today, is what's happening in China and the PBOC's pushback on the yuan weakness. And as dollar CNH is coming down, CNY is coming down, I think that's also feeding into this dollar short position. So many people have been long dollar CNH to get that carry, and that's being pushed back. I think that's having reverberations in dollar selling as well. So there's a lot going on. There's a lot of pieces of the jigsaw which are focused on, and our job is to try and make a clear understanding and try and make money from it at the end of the day. That's what we're trying to do, or lose less is the situation. Anyway, Blake, it's been good to share this ride with you, and it's good to share the journey with you guys at home as well. If you stayed this far, obviously, if we can get a like, that would be really appreciated. Leave a comment where you can, and we'll get to that, especially in any kind of market-based situations. There was a comment about Aussie Swiss, which we'll cover that in the chat and maybe bring that up as a chart next week. So apologies for not bringing that up. It's just covered my mind. And we'll catch you guys next week for more of the trade-off.